Hey guys, welcome back to the channel. So, we're kind of talking about taxes and stuff like that. And one of the big topics here, probably over the past couple of years has been a wealth tax, right? So let's talk about that. Like what it is, let's understand it, go into an example. And we're going to talk about, something that's being proposed, right? So what I want to talk about is basically like, the wealth tax, first off, it's going to be a tax based on the market value of assets owned by a taxpayer, right? Although, a lot of countries choose to tax wealth, um, the US has historically relied on taxing annual income to raise revenue, right? Well, recently over the past couple of years, the immense and increasing disparity in wealth in the US, as of I think it's 2000, it's either 2017 or 2018, like the wealthiest 10% owned something around 70% of the country's wealth, right? And something like the richest 1% owned around 30%. Or the richest 1% owned around 30%, right? And that's according to the Federal Reserve Board, right? And this all basically prompted politicians like Bernie Sanders and Elizabeth Warren, right, to propose a wealth tax, right, in addition to the income tax, right? Um, and in March of 2021, what we're going to talk about a little bit later is, Elizabeth Warren introduced the S510, right? It's a revised version of her earlier proposal to impose a tax on the net worth of very wealthy individuals, right? So let's understand wealth taxes, right? Well, a wealth tax also may be called capital tax or equity tax, right? And it's imposed on the wealth possessed by individuals. The tax usually applies to a person's net worth, which is assets minus liabilities. These assets include, but they're not limited to, cash, bank deposits, shares, fixed assets, personal cars, real property, pension plans, money funds, owner occupied housing, and trusts. Um, and then an ad valorem tax on real estate and an intangible tax on financial assets, are both examples of a wealth tax. Generally, countries that impose wealth taxes also impose income and other taxes too. Not all countries impose a wealth tax. So, like France, Portugal, and Spain, these are going to be examples of countries that do not, or I mean that do. Um, but you got Austria, Denmark, Finland, Germany, Iceland, Sweden. I'm sure I'm forgetting one or two. They've abolished it in recent years, right? In the U.S., federal and state governments do not impose wealth taxes. Instead, the U.S. imposes annual income and property taxes. However, some consider the property tax a form of wealth tax, right? As the government taxes the same asset year after year, right? So the U.S. also imposes an estate tax on the death of individuals owning high value estates. In 2019, though, that levy contributed to only around 0.5% of total U.S. tax revenue, right? Let's talk about an example, right? So, in effect, a wealth tax impacts the net value of the assets accumulated over time and owned by a taxpayer as of the end of each tax year, right? An income tax impacts the flow of the additions in value that a taxpayer realizes, whether as earnings, investment returns such as interest, dividends, or rents, and or profits on disposition of assets during the year. So I want to look at an example of how the wealth tax differs from income tax, right? So, let's just say assume you're going to make about 120,000 annually, right? That puts you in, if you look at the previous video, the tax brackets, you're going to fall in a 24% tax bracket, right? So that individual's liability for the year will be 24% of 120,000, right? About a little over 28,000, almost 29,000, right? It's like 28.7, 28.8. What is the, tax liability if the government taxes wealth instead of income? Well, if the taxpayer's assessed net worth is 450,000 and the wealth tax is 24%, then the tax debt for the year will be 24% of 450,000, which is about $108,000 instead of that 28.8, right? So In reality, annual wealth tax rates are significantly lower than annual income rates. So let's take France, for example, right? The wealth tax used to apply to total worldwide assets. As of last year in 2020, right, it only applied to real estate assets worth more than £800,000. If the value of those assets fall between £800,000 and £1.3 million, then it's subject to a 0.5% tax. Rates continue to rise at graduated thresholds, right? 0.7%, 1%, 1.25%, right? Until finally, real estate assets over £10 million are taxed at 1.5%. A wealth tax cap limits total taxes to 75% of income. So in Spain, as of 2019, a resident is affected by the wealth tax, which ranges from 0.2% to 3.45% if the value of their worldwide assets is above £700,000. So, if a taxpayer is not a resident of a particular country, then the wealth tax generally only applies to their holding in that company, right? So let's talk about the S510, right? The wealth tax proposed by Senator Warren, right? And we'll begin with the 2023 tax year, right? So taxpayers subject to the wealth tax, right? Those whose net assets, right, assets minus debt, are valued over 50 billion, right, based on their 2022 valuation. Tax rate is going to be 1% on net assets valued over 50 million and up to 1 billion. 2% on net assets in excess of 1 billion. The threshold for the net asset base is higher than typical European wealth taxes. Assets subjected to the tax, though, all types of assets. Anything that the wealthy person owns, including stock, real estate, boats, art, so much more. So, what would the revenue effect be? Well, it's estimated to raise 3.7-ish trillion over 10 years and to apply to approximately maybe about 100,000 households, right? When it was introduced, right, the bill had seven Senate co-sponsors: Edward Markey, Kristen Gillibrand, Sheldon Whitehouse, Brian Schatz, Bernie Sanders, of course, Jeff Merkley, Mazie Hirono. Some other ones became a later co-sponsor, like Alex Padilla, right? There's two House co-sponsors, right? And then they support a companion bill in that chamber, right? And all of them are Democrats, right? So I'm not here to judge whether someone's a Democrat or a Republican or independent or whatever you are. Like, whatever you choose is what you choose, right? I'm not here to judge. Well, let's talk about the pros and the cons, right? Okay. Well, proponents of wealth taxes believe this type of tax is more equitable than an income tax alone, right? Particularly in societies with significant wealth disparity. They believe that a system that raises government revenue from both the income and the net assets of taxpayers promotes fairness and equality by taking into account taxpayers' overall economic status, and thus their ability to pay tax. Critics allege that wealth tax discourages the accumulation of wealth, which they, contend drives economic growth. They also empathize that wealth taxes are difficult to administer, right? Administration and enforcement of wealth tax, it's going to present some challenges not typically entailed in income taxes. The difficulty of determining the fair market value of assets that lack publicly available prices leads to valuation disputes between taxpayers and tax authorities. Uncertainty about valuation could also tempt some wealthy individuals to try tax evasion. Illiquid assets present another issue for a wealth tax. Owners of significant illiquid assets may lack ready cash to pay their wealth tax liability. This creates a problem for people who have low incomes and low liquid savings but own a high value illiquid asset, such as a home. For a similar example, a farmer who earns little but owns land with a high value may have trouble coming up with the money to pay a wealth tax. Some accommodations may be feasible to address it administrative and cash flow issues. For example, allowing tax payments to be spread over a period of years, or creating special treatment for specific asset categories, such as business assets. However, exceptions could undermine the purpose that many attach to a wealth tax, structuring the overall tax system to make all taxpayers pay their fair share. Personally, for me, guys, I'm not really going to give my opinion on it. I'm just trying to provide you guys with information and help you get a better understanding of what it is and what they're trying to accomplish. Whether you like it or don't like it, you guys can tell me in the comments, right? If you like this video, go ahead and give it a thumbs up. If you're not subscribed to the channel, I'd really appreciate it if you did. Until I see you guys in the next one, y'all be safe.